the right stock at the right time.
Hello and welcome. This is Bloomberg Quint, an earnings special, and we are taking stock of Persistent Systems for the quarter gone by as well as the financial year coming up ahead. We are in conversation with Dr. Anand Deshpande of Persistent Systems, who could possibly take us through, the many various aspects of the company in the financial year gone by, as well as what we can expect in the upcoming financial year. Good morning, and thank you so much for joining us, Dr. Deshpande. Let me start by asking you about what has been a very challenging year when it comes to your revenue growth. If you could tell us about the various aspects that have perhaps put some pressure in terms of growth, as well as what we can expect as we move into the next financial year.
Yes. So during the quarter, the numbers were $118.3 million US dollars, which was a 2.1% degrowth. The main reason for this quarter's challenge has been relating to the IP revenues that we have for the quarter. And there is a significant seasonality in this quarter's revenue in the IP context, partly because of the way our customers' financial year is set up on that. And some of the revenue share agreements tend to be weaker in our even quarters. And that's one of the reasons why this number has been slow. Overall, if you look for the year, we had a $480.9 million revenue. This is a 2.2% growth, which is significantly lower than what we had planned. Now, if I were to try to figure out why this was the case, there are 3 or 4 reasons, and actually that added up to this particular growth rate being muted. One, of course, was the fact that our largest customer has been going through certain challenges, and that has reflected in our financial numbers being lower on the top 1 account if you look at that number. The other part of this has been also that during the first half of the year, we were not quite as ready to take on the increased staffing requirements that we had, and our staffing engine started rather slowly in the second half of the year, which contributed to a lower overall number happening for us. And we had certain customer-specific challenges that reflected in Q2, which carried on through the year. So a series of small misses at 3 or 4 places actually contributed to the overall number being lower than what we had anticipated.
Right. Dr. Deshpande, there was a mention about certain businesses maturing at this point in time. Are there more aspects here, or perhaps, certain other businesses which will mature in the upcoming financial year that may have an impact in revenues? And that said, what about the new deals which are in the pipeline that may actually counter this weakness and accelerate growth?
No, I think I'm looking at a fairly good next year. We have made certain changes on our management side as well. So we have a new CEO, Chris O'Connor, has joined us on February 25th. He comes in from IBM, and he has a very good understanding of the ecosystem around IBM, which is our largest customer as well. So we are looking at certain opportunities of growth in that ecosystem that will reflect in financial numbers being better this year. We've also made another change. Sandeep Kalra has taken over as the head of technology and solutions business. So I think some of our internal challenges that we had, we have addressed them, and the staffing engine has also been hiring quite aggressively in the last half of the year. If you look at our total strength, it has gone up by 1,000 during the year, but most of that has come in the second half of the year. So we do expect that there are a few deals in the pipe which should help. But even otherwise, some of the ones that we have already signed during Q3 and Q4 should reflect into better numbers for Q1 and Q2.
Right. Dr. Deshpande, you did mention that hiring has been, relatively aggressive this time around. What we're also noticing as far as the industry is concerned is a little bit of a talent crunch, which is why we're seeing people costs rise specifically, and in in case of many of your peers on site. Can you tell us a little more about this, and if this can have some implications on operational margins, specifically to do with employee benefit costs?
Yes, I think overall the cost of employment and the employee costs are going up both in India and in the U.S. But there is definitely a talent crunch in the U.S. In terms of ability to hire in specific skills and specific geographies. That has also resulted in rates being better. So some of the improved rates will offset the cost extras that we are looking at. But in general, it's a very tough market to hire in the U.S. So part of what you see in our numbers also is that the offshore percentage has gone up. The offshore revenue also has gone up, which actually makes the growth rate slower, but the profitability improves as the business moves offshore.
All right. And a word on how utilization and perhaps the currency movements can have some sort of, impact on operational margins. How are you reading some of these features?
So I think the utilization numbers for us have been pretty healthy. This quarter, they were 79%. Overall, we've had 80% utilization on offshore side, and about on-site, it's been between 85 and 84, 85 in that range. So I think that's pretty healthy right now, especially since the market is good and we are growing. So I'm not too concerned about the utilization rate at the moment. The Forex, of course, that's a hard one to comment on. All I can say is that we have $112 million of forward cover at about 73 rupees per dollar. So that is what we can plan at the moment. So.
Okay. All right, Dr. Deshpande. Thanks for joining us and taking us through the numbers as well as the outlook going forward. All the best for the future.
Thank you very much, Hagam.
Thanks. So, that was the management of Persistent Systems who has acknowledged that it's been a challenging financial year, but going ahead, they are expecting significant improvements when it comes to, their operating environment as well as revenues going forward. Well, that is all that we have on this special edition of, the BQ earnings. And lost my lineup. Stay tuned and we'll keep bringing you more.